What is going on? Yeah, I figured that first intro is not gonna make it. So I figured I should play a second one so when they delete it, it'll be all right. It won't. I do think that I love that. Okay, that one maybe can stay. You can play clips and then they usually don't have a problem with it. Woo, woo. Okay. Video, audio are good. Okay, cool. Yeah, I half the time I forget to turn the microphone on, don't I? I'm gonna save Bitcoin for a little later. Andrew might come on. He's busy though. I don't know if he'll make it, but all right. So who's here? Der Meister. How's it going, man? Lincoln, Bacon, the usual suspects. All right. I have to say, I am torturing myself reading Rich Dad, Poor Dad for you people. So you better, I swear to God, it's killing me. I read half of it. I read half of it like in a day. So I'm trying to write notes, I guess, for now. But what like I don't know. I'll do I don't know if I'll do a live stream or just a video. So I am writing my notes. I'm gonna flip. So that's coming. And then Ross Gerber video. I don't know, maybe Sunday for Ross Gerber. I'm busy all day tomorrow. So I can't really do anything. Oh, that's that. Very interesting week. Let's see. Duped into buying 2 books and taking the time. I didn't buy it actually. I just got this one online. I did buy a copy though, so I guess I helped pay for his gold shilling or whatever he shills. But all right. I want to talk about brief recap. I brought up I did Yieldmax, and if you didn't, I mean, unless you live on a rock, I've been bashing Yieldmax for a while now. So, update. There's a lot of people. They kind of did what I thought when I made my videos. It was about Tesla, but it was really about Yieldmax. And I said you're going to have to go from fund to fund because they're all going to deteriorate. So you're just going to have to keep hopping from one fund to the other as they start to underperform, and pay taxes, huge amounts of taxes. So sure enough, here we are, 2 months after I did those videos, or a month. So they've all jumped from Tesla to Coney, the Coinbase one, because Coinbase is forever apparently. So Coney now, I wasn't really going to cover this today, but I love it. Coney got absolutely smacked in the face today, just like it's supposed to. So now who knows? Maybe they're all going to switch from Coney now because they can't handle red, the people that buy these things. So they're going to go from Coney now. I suspect they're probably all going to start buying. Maybe it's the AI one. I was looking at the list. I'm like, what's the newest one that they can all jump and bandwagon onto? Does it even have a website? Oh, it's not even out yet. So maybe this is the one when this pops. Here we go. So maybe they'll pop to this one when Coney starts going down, because I think Coinbase is going down a bit, honestly. I actually said I was thinking about, it's funny, I said on an end of year live stream on Jesse's, I was thinking about shorting Coinbase, which I was researching end of December, because the narrative that Coinbase would benefit from these Bitcoin ETFs, I was like, I think everyone's being very presumptuous. So as I was researching it, it got hosed, and I'm like, fuck. I was like, oh, if I just got on it like a week earlier, I would have been perfectly timed for it. But I don't know. I don't think it could keep going down, but I don't know. The kind of juice is out of it now, because it was like 180 when I was thinking about it. But it's okay. I'll survive. It's not the end of the world. Yeah. Let's see. Bro, I saw a dude 2,000 shares of Tesla and 1,000 of Coney. I'm like, holy portfolio. I don't know. This is like my pet project, apparently. Like, I bash Yieldmax. I want to bash SoFi. I don't know. I'm trying to help people. I'm not just being a dick. It's kind of a bonus. Oh, wait, hold on. Andrew's here.
What's going on?
What's going on? How's your meeting? Good?
Yeah, no, it was good. We're doing some more, talking a little more tomorrow as well. But we're kind of like, especially for them, I'm like, okay, it's kind of late. Let's pick this up tomorrow. But
yeah, I got all day tomorrow. I got kids basketball, and then freaking I have to do some shopping, and then we're gonna go see Mozart, which will be fun.
Ooh,
I got
okay.
Mozart tickets to the orchestra. So
Dude,
I tell people like, listen, just bring your kids. Don't even ask them if they want to go. Like your 10-year-old
mhm.
kids, just bring them. Don't even tell them what it is, and I'm telling you, they'll love it because this is like the third time we've gone.
Yeah.
So
Well, I mean, as a kid, and like I know it's Mozart, it's not the same, but like growing up, I loved actually, and I still do like Broadway shows and musicals, things like that. So I'm sure I'd love Mozart. I was in band growing up too, so I'm sure I'd love all that.
I saw Bram Stoker's Dracula from a theater club when I was in high school. It was so
Mhm.
fun. Like, because I didn't know it was a play. I thought it was just a movie, and then I didn't even know it was a book. So it was all backwards in my head.
That's
I
awesome.
thought it was just a movie, but it was fun. I was up high, so when they stabbed Dracula, you could see how the guy moved over. So it's like,
Yeah.
oh,
You're like, "Wait a minute, I don't think you actually stabbed
yeah,
him."
yeah, you did, you cheaters. But uh,
Oh, but you're talking about my favorite topic in the
do you
world.
want to talk? I didn't do Bitcoin yet. You want to just? I was just going to cover Yieldmax pretty quick, like the
No.
most recent stuff, like what we've seen.
Yeah, and I think that you were saying, because I was listening as I was living in, that they're doing the thing you said where they're hopping from fund to fund.
Mhm.
Yep.
That's what I thought they were gonna do when I did my videos. Because 'cause
You
they're all gonna deteriorate. So the fund they're gonna have to keep putting out new funds, and then they're deteriorate, and you'll have to keep
right,
hopping from one to one in order to stay above water, basically. Um,
right. It's actually like it's kind of sad when I'm looking at like some of these communities and they're talking about they're like there's also this like whole because it's a lot of people that are uninformed investors usually. And
yeah,
so a lot of uninformed investors I feel like have this like mentality of well I just got to get even on my investment. It like
I saw that.
I can't
Yeah,
sell until I'm even. So they're like, "Oh man, I'm down like this much on my." Because if you look at the chart for Tesla, which is like, it's not good. And
no,
then they're like, "Oh, I'm down a bunch of my Tesla. What should I do?" And then people are like, "Well, wait for it to come back up. It'll come back up." I'm like, "Well, there's no guarantee on that. Even
no.
on the stock, there's no guarantee, but definitely on like the stock's one thing, but
And I
then
don't
like,
think they don't understand the mechanism, because if they
mm,
understood the mechanism, they would never have bought it. So it's just there's no point of even explaining that part. But then I'll tell them it will deteriorate. The only question is time. And then their first response is, "Well, why did it go up?" And I'm like,
yep,
"Temporarily, it can go." So people want listen. Temporarily, yield max can go up if the stock performs in a narrow channel between the
mm-hmm,
sold contracts, the put, because they sell a call and a put, but then they also buy calls. So as long as it
yeah,
follows that narrow band of performance,
it's
they make money, and the nav goes up, and it does go up, which is what happened with Coney. As soon as it deviates from that, they're just going to start losing. Like it's a gambling.
it's
Uh,
crazy too. Once I realized I didn't, because this is a lot of things like I don't look very far. Like I don't need to look far into this to know I'm not interested in it. Like I look at it very quickly. Okay, I didn't realize they're doing synthetic longs until like I was listening to someone talk about. It. I'm like, oh, this isn't even like a covered call. I mean, like a synthetic long has slippage in it. Like
yeah.
uh, especially if you're then selling the covered call on it. Like it just
Now they'll say, "Well, you're saying all covered calls go to zero." I'm like, "I'm not saying it goes to zero. It'll keep getting cut in half, and so it'll keep getting cut in half into oblivion. So it'll never. Well, eventually it could go to zero, but like it'll just keep half, half, half. So
no.
$5,
Eventually,
250,
the
dollar.
eventually they'll do some reverse splits on it to
Yeah.
keep the dollar amount high. So it doesn't matter.
Mhm.
But you're right. Like as long as people are buying it and the nav stays up, then it doesn't matter. But even these guys at Yieldmax, I mean, like, come on, they know what they're doing. You look at the stocks that they're picking, you're like, oh, they're picking all these like retail. I'm surprised the Palantir one isn't out yet.
Yeah.
Um,
Have you noticed? So I looked at the timing, and so they brought the Nvidia one out in May,
mhm,
ironically after it started ripping. They brought the Coney one out after Coinbase started ripping this summer. They like I don't know how these people see it. They watch the charts. They have all these
mhm,
things ready to go. I think they probably have like 100 of these things ready to go.
I think
And as
so.
soon as they see a stock start popping as popular, they release it,
Hmm.
and it gets that pop, and then they make their money before it starts to deteriorate.
Right.
That's why I think they'll do an AI one soon, because that's a popular topic and they know it is. So here
Yeah,
we
but
go.
the
But
only thing with the AI one is like, what are the companies that are gonna be in that? Do they say? Top 10
Here's
holdings right there. Oh,
C3. C3
it's all C3?
for now. I haven't read the prospectus. I don't know if there's various ones they can pick from, so I don't know. But apparently right now C3. Oof.
Oh,
Probably because it pays a high premium because it's a crazy beta stock. Like,
that's the other thing they do is they take stocks because and the other thing they know they're doing is like you said, there's going to be a they can only pay out so much, um, because it's like as Tesla goes down, you can't pay a ton of Tesla. So then they release a new one that has a fat dividend on it. The
mhm.
dividend, by the way, it's not a dividend. It's a dividend is what a company does. This is like I guess technically, I guess it'd be a dividend, but it's fundamentally different from a company dividend because all they're doing is selling. It's you're getting like income instead of actually getting appreciation. But anyway, so then they just give you a new fat dividend. So everyone, like you said, they jump to the next one.
Like
And
here we look. Here's Coney. So so
do
they're
you
all
know?
gonna flip out of Coney
Yep.
because like look, people, look what happened. It's exactly what I said in my video. It's not changed. When a stock will start to rip, but these synthetic call strategy stuff, you're capping your gains. So as Coinbase ripped, you're not seeing
Mm-hmm.
nearly as much of the benefit. But then look at the drop. It's almost the same drop at the end. So you're not, and at the end, guess what? Coinbase performed better. And this is with total returns. So this isn't price returns.
Well,
But
I gotta. You're exposed to the same downside by the strategy that they're doing. You just cap your upside, and you cap that upside in exchange for like them paying you some taxable income. Like here's my thing. Let's say you're bullish Coinbase, just as an example. Just buy Coinbase, and then when you
yes,
need money, sell some stock. Like if that's really your plan, I'm not saying that I think that's a good plan, but if that's what you want to do, it's much better almost every time to just buy the underlying asset. There's like few very specific scenarios where for probably a short term, the yield max will be better, but for the vast majority of the case, just buy the underlying asset. Like I don't.
here's Nvidia. Same thing.
Oh, that no, this one's gonna be terrible because like Nvidia has been rocketing up. You
So
just like look how much they lost that upside.
it
Oh,
started in May, not January. So it's not
mhm,
all the upside, but you can see like it's the same
mhm.
situation. Nvidia
Is this
ripped.
is this
They
total
didn't.
return here, or is this just price return?
Um, I think I did total return.
That looks like total
Yeah.
return because I was gonna say if it was price return, it would look way different. I think. Okay.
Again, like Nvidia rips and you're underperforming your benchmark, people.
Yeah.
Don't compare this to S&P 500. Compare it to the benchmark, which is the stock. You will
Hmm.
underperform this. You underperform your benchmark and you pay 1% to do it. And then you pay taxes. If you live in California and there's guys, I know it, that have like $1 million in Yieldmax. I think they're killing it, right? Like
Hmm.
300,000, whatever payments. You're paying 50% to the government. Like you're gonna get killed on your taxes. I hope you're ready for it, whoever has these things. But
Oh, I was gonna say I was surprised they did have a PayPal one. I didn't know they had a PayPal one.
yeah. But like you could this thing, oh, this is probably it's Bitcoin, but it's a covered call strategy.
Dude,
Did you see? Look at this. This
the
I
man.
feel like it's a typo. I don't believe it. I don't believe it.
Well, when so first of all, when did this come out?
Let's look.
Because
Maxi.
I think this is before like it was easy to do. Because like to be fair, it's a lot harder. Yeah, so this came out.
Last year,
Yeah,
September
because
2022.
yeah, so my only like argument as to that high expense ratio is I don't even know how you do that. Like
No.
what products are you using? I'm not saying it's good, but I don't know how you do like selling cover calls on Bitcoin
Yeah, how
because
does that
like
even function? Because like
so I guess if you might be having to do like swap agreements with people and stuff and like weird kind of more
okay.
uh complex strategies,
Like
but
what
like
Jeppy's doing kind of, you're making agreements with banks maybe, like
yeah,
some sort
exactly.
of equity linked something product.
Yeah, I mean, like the thing is now that there's ETFs, it's easy to do. But like
Mhm.
before that, I don't know. That was my only thing. Like you shouldn't be paying 11% for it, but like,
Should we
oh,
see what does Yieldmax Reddit say right now? I wonder if
I
there's
didn't
any
know there was a Yieldmax Reddit.
you didn't? No.
No,
Here's one. A
no.
tale of two tickers. I bought in 2023 Tesla and NVDY 2,000 shares each. I'm up 7K on Nvidia's and down 7K on Tesla. And you're paying a lot of taxes, so you're even worse off, people. But
When did he buy it?
it says August 23.
Like
So you've netted nothing. Okay, so you've wasted your time
he
while the
picked.
market ripped in the fall. You lost money or broke even. Cool. Um, buy Tesla and sell based on percentage distribution. Okay, these people. Coney, what are your thoughts on Coney? My share price is in high 20s. Oh, he's having a
Oof.
great day today. High 20s. I'm getting wrecked. It's 4% of my portfolio. Well, at least that's not bad.
That's
Okay.
not. Yeah, luckily that's not like the communities that I've talked to. The people in it, like they're like 50%, Coney, 50% Bitcoin or like crypto or something.
Oh, in what situations does Tesla go up or down? I you what? Like you're buying this? What?
How far down so they think a reverse stock split will like save them, by the
Okay.
way.
So
That's
it
what they're
goes
saying.
down. People when their option strategy fails in a month, they lose money. Then they have to pay you a distribution out of their treasury assets. So the stock will go down. It's actually there you go. Will it go up temporarily? It could, I guess, if the stock goes in a narrow channel in a certain direction up. Cool. I'm
My
glad you know
take
that before you put all your money in it, people.
This guy says my take is as long as you didn't put all your eggs in the Tesla basket, you'll be okay.
Oh, is that what he? Okay.
But
Oh yeah,
that
yeah.
so
Okay.
you're being like that was a bad investment. Hope you're okay, man.
Let's see. Trippable. Am I rich?
Hey. At
Oh
least
my
they're having a
god.
moment of clarity.
Wait, what did he write? Oh, he's trying to understand it. See, these people think that this is like their path to being a millionaire faster than a normal dividend investor. Because I got a
Mhm.
comment from one guy. He's like, so you're going to be a millionaire on dividends when you're 90, and I'm going to like 10 years. It's like, no, it's not.
Well, the
You're
difference is
really
that your dividends are actually value created because it's from cash flows from a business.
yeah. They create reproducible cash
Right.
in a business, people, and I get a piece of the cash, and then they keep investing and moving on. You are just taking treasuries in Yieldmax. You just have a pile of treasuries, and you're using those treasuries to buy options or sell them, and you win or you lose, and
Yeah.
that's it.
And I want to say I think there's a guy in the chat, Der Meister 812.
Yeah, he does options trading. He was telling me in the comments before.
I brought this up to like I mentioned this bill. I said like, well, if you're so concerned about like income and all this, why don't you sell your own cover calls? So like, I don't understand how to do that.
No.
Well,
Yeah, I said that too. I'm like, I don't have this isn't like to make fun of derivatives options people. I'm because I was
yeah.
like, good, go for it. This is not that though,
Well,
owning these funds. Like
and
if
any
you
derivatives
can do these
options person
strategies,
do
more
was
power to you.
they'll also tell you like if you just indiscriminately sell a call like at this price every month, you're probably gonna one, you're gonna get your shares taken away from you at some point. So then what do you do? Like
Yeah.
it's they would tell you like you can't just be because that's what Yieldmax does. They're not looking like their goal there is not to make the best play, like sell the like options so that they win. They win by you buying their assets and getting a fat dividend. But like, and I almost feel bad because like some people are like, oh yeah, I'm retired now by using Yieldmax, and I was like, dude, you're taking a break.
I
You're
know.
not retired. I'm sorry.
Because they'll brag about, and I said this in my review, I'm like, they're bragging about the amount of payments, and then they say also briefly they're reinvesting them. I'm like,
Hmm.
you have to keep reinvesting them because they deteriorate. So you'll never be
Yeah.
able to pull those dividends out and use
Hmm.
them because then your payments will just start falling apart. So
Right.
it's literally just a taxable event.
Yeah. And like, and I even have some problems with like guys that I think guys that are really heavy options. Like, I don't know if you're familiar with like the wheel strategy. I know there's a lot of proponents of that. I even think those guys, they downplay because they make it sound like, you can't really lose ever. And that's kind of true, but the way you lose is that your upside is always capped by selling puts versus just buying a stock or selling calls. So like you have to be smart. Let
Yeah,
me just summarize it like this.
Darmeister, the thing,
Life
like,
isn't easy.
with people, it's like you can start and stop, which
Mhm,
one of these funds like Yieldmax can't start and stop. So
mhm,
they have to constantly keep doing it, even if it's good or bad times to do these strategies.
exactly.
And like if you own the assets and are doing contracts, then you could stop. You still have appreciation of the asset while you're doing your contracts, unless they
Mhm.
get called away. But
And like I used to do some covered call selling on individual stocks, and even my ending takeaway was like, because if you're going to do it on stocks that you own and you're actually bullish on that stock in the long term, like it's very hard to, you have to be either saying I'm just trying to capture volatility, because like people would say, oh yeah, well just set at a price that you're happy to sell at. So you set that price, and then there's like positive stock news or positive news for your stock, and you're like, well, now I'm even more bullish on this stock that I was already bullish on. So what do I do now? But
there was a YouTuber I follow. He had the next star with me, and he did a covered
mm,
call just to generate some premium. And he's like, it'll never get to the price I've got the premium for, and it did. So he lost his shares. It's like
you know who know
the whole
there's a
point of
YouTuber
next
who's,
star's thesis was next year, and he lost them. So now he's got to buy them back now, though at a higher price. It's like
well,
that premium didn't help.
isn't that what happened to Everything Money? Was they bought Meta on the way down and they sold cover calls in the hundreds, so they missed out on the appreciation to almost 400 a share because they got their shares called away.
Yeah, he got into Meta on his puts. I know that.
Yeah.
I don't know the other part, but
No,
oh yeah, he did not
they
hold it
sold
on the way up.
calls. They couldn't. They didn't hold on to it because so like you're buying it in the 200s and they're actually right on Meta if they were bullish on it. The problem was then they're like, oh, now I'm going to sell calls. You got your shares called away in the 100s, and you miss out on that upside. Like, and that's very different from me. I also sold Meta in the 100s because I was like, I don't know how confident this is. I bought it lower. I bought it like around 100 a share, and then I was like, and I was wrong. Like in the middle hundreds, I was like, I don't know, like there's still maybe some like threat with Apple and all that. I don't know how I feel. And I sold it and bought something else. Next thing I know, I was like,
Wow.
and then this is the other thing that some communities they're you buy the Yieldmax and you take those distributions and put it into Bitcoin. Or actually just crypto.
Yeah, light
Well,
grayscale.
the thing that's crazy is, have you seen the premiums these grayscale funds are at right now? They're like almost 2x premium to the underlying asset. People are
Really?
buying them. Yeah.
Jesus.
So uh, they have it on their website. Like if you pull this up, so GBTC and Ethereum. Those are fine. Let me find. Let's see. Like,
Is it holdings per share? Is that
so they have a chart. If you keep going down, I think that'll show right there. Is that the performance? That's it right there. So it's like market price versus holdings per share.
okay?
So like the ones that are really bad. So which one are you looking at right now?
Litecoin.
Yeah, Litecoin. That's a good one. It's almost. Is that almost? Let's see. 112. I have market price of $10 a share. Holdings a share of 637, which is a lot
Yeah,
better
right here.
because on 1226, or I'm sorry, like beginning of the year, it was $17 to 631 holdings a share. So by the way, if you look at LTCN price, so go to the stock price for LTCN, it's cratered like 40% this year, and Litecoin is flat this year. So if you bought Litecoin at the beginning of the year, you're like flat. If you bought this, you're down 40%.
Oh my god.
And And the bullish narrative is people are saying, well, when the bull market kicks off, the grayscale trusts are going to be trading at like a 3x premium. They don't have any reason as to why they think that, but I think I think just, and I don't know if I've told you this, the people that are saying this, the influencers, I think they bought into this early and they see this and they're getting exit liquidity. That's my own personal theory, because I don't think
No,
they're
I think so too. I think they bought in and planned this from like last year.
Mhm.
Some of these people, and it'll all be gone when they're done. They'll delete everything and move on. Or
Sure. Yeah, I mean, they made their money. Because like the other one I see is BCHG, which is like a similar. I think that one's also down. It's only down 20% year to date. I don't know what its premium or discount is.
$2.30 per share. Oh my God. What is that? That's not a huge difference, but
No, it's almost 2 times.
oh, it is. Yeah. Wait, this is the fake Bitcoin, right? The other one.
Yeah, the
split.
Bitcoin Cash. I don't know. I think Bitcoin Cash was like a branch off from Bitcoin. I think back in the day, because people were like the Bitcoin network's not fast enough, so they made a faster Bitcoin. So yeah, it's like fake Bitcoin.
Jesus. So, yeah, they're all gonna get the people like. There's people on the inside that planned all this. They're gonna make money,
It,
and 90% of you are gonna lose your shirt. Maybe some of you'll make a little money, but
and just
I mean,
to explain this, I mean, for me, and I actually brought this up. I was playing dumb, but I brought this in the community. But I just think it's actually a decent play. I was like, should we just short these grayscale funds and go long the underlying asset, because that seems like a decent? And they're like, no, that's stupid. Like, and it is stupid, because if it got to that kind of premium, like it could, it could fluctuate. But if you have the money, I was like, actually, this might be a decent like arbitrage play. And I was like, go long the underlying, short this thing. Good, would have been a great play on the Litecoin one.
I mean, like when everyone's telling you when you keep hearing like a crypto bull run is coming or happening,
Mhm.
is like affirmative statements. It's like it's probably the opposite. Like if everyone knows it's happening, like it's
It's
probably
kind of
not.
like when everyone's calling for a recession, it rarely happens.
Mm-hmm.
It's like last year, everyone was like recession this year. That's why I'm more nervous this year, because everyone's like, oh yeah, like we're gonna have a really strong economy this year. Like we'll see. That's but yeah. So
So
and then we
Bitcoin
have,
ETFs, are you in? We doing it?
oh yeah, man. See,
Let's do it.
it was too hard for me before to like go on Coinbase and buy them. So now that it's the ease of me being able to do it my own Fidelity app, I'll do it for sure.
It's
But
so funny. Like,
my favorite thing was like even the Bitcoin bulls, and like we don't have to get into like the argument of pro Bitcoin, whatever. Like that's another thing. And I think, I don't know if you listened to me and Fabio talk about this last night, but one of the things I'm always worried about is like talk to people that are actually buying Bitcoin and ask them to lay out like why they're like bullish on it. If they can give you like a well reasoned, solid, thing, like Fabio kind of did about, maybe it becomes a currency that people use, or like, kind of goes into that spiel, you'd be like, okay, fine, this guy knows what we're talking about. 99% of people are gonna be like, well, Bitcoin goes up,
mm-hmm.
and that's going to be their argument, or like something that's not very intelligent. And like that's the thing that kind of scares me about Bitcoin, is it's like I think a lot of people that are bullish it, they're only bullish it because they just want to get rich. Like they don't care about the underlying asset at all, the
No,
underlying like, fundamental utilization of it.
they're impatient. They want to get rich, or they want to fire, whatever you want to call it. So
They
I,
want to go
I just,
retire in El Salvador.
yeah, I've bought Litecoin, Bitcoin, Ethereum during the clown market. I've never thought of holding these things long term, honestly. Like, I almost bought like 50 grand of Bitcoin when it was like 14 grand. Because I was like, everyone thinks it's gonna like, it was priced like it was just gonna stop existing. I'm like, I know it's gonna keep existing, but
I think
I don't know. The
I could be
wife
wrong on
wouldn't
this.
go along with it. It's
Kind of good on your wife, because it's, but
yeah, she's smart. I'm not gonna. It's fine.
I think if you go to coinmarketcap.com, you can see the dominance of Bitcoin, like there, which basically means like the percentage of Bitcoin as all of crypto. And like, I think it'll be priced to like potentially die. This is going to sound counterintuitive when that Bitcoin is like 90%. Because that means that all of the crypto, all these stupid things like Dogecoin, and this has been my thing, is like, you can make an argument for Bitcoin. Give me an argument for why Dogecoin is worth $11.5 billion. It's like, it's funny.
Maybe people just forgot their crypto key and they don't really they still have it.
But like, I mean, all of these, it's like Bitcoin's one thing, but when you start going down like to some of these smaller things, I'm like, well, what's the bullish thing on this? And it's like, oh, well, this is like you can build websites on the blockchain. And what's the benefit of that over building websites normally? Well, it's Web 3.0. Okay, well, what's the benefit? Well, there really isn't one.
Hey, I was staking Algorand for a while.
Oh, really?
They were giving me 8% on it. So I was staking like a few $1,000s. Then I just got bored of it. But yeah, I just they don't do anything. And people, I saw some guy on a certain podcast say that he's like, well, crypto, what's the difference between a stock and crypto? And he was like being real about it. He's like, stocks are fake, just like crypto, if you're saying the way you work. And it's like,
I mean,
how do you even argue that? I'm like,
well, at some point he's right. If you go like, ultimately, if the internet goes down and the world goes into chaos, no one's going to care that you have shares of Wells Fargo. They're gonna be like, that's nice. I have a gun, but like, I hope we don't get to that point. That would be like the only thing where I'm like, yeah, I guess.
Can you still get stock printed?
You can. You
right?
You, actually, you should.
Isn't it CompuServe? You can still get the shares printed out if you want.
Yeah. The only one I know that people do that for is Disney, because they have a really cool looking. They have a really cool like design on their certificates. What are they called? So yeah, if you ever seen, like, people will buy them for like kids sometimes because it's like, oh, you own a share at Disney, and it's really cool. It's got like Mickey Mouse and Goofy and all these guys on it. It's pretty cool.
So I did this. I thought this was kind of interesting because they say it's a replacement for gold, right? And you buy gold because it's inverse with stocks and equities. You hope, right? So stocks take a crap, it gives you that upside, so it protects you a little bit, which kind of ties into my 401k discussion for people watching. Bonds and things like bonds and treasuries are protecting you from the full downside of equities, hopefully. So I took you remember the currency crisis, right? Like August 22 to the end of that year. I just did that dates. So here is Bitcoin, S&P 500, gold, and Barrick's gold, and then the spot gold price. So you can see. So this is the time when gold is supposed to perform. Currency crisis, stocks are down, people are worried about currency. Gold did perform. Gold was up. The Barrick's was up 10%, and spot gold.
What's the time frame on this? I can't see the time frame. What is this?
It was August 22 to December 22.
Okay.
Right when things were going to shit. So gold did what it was supposed to, right? It was positive.
Right.
Bitcoin was way negative. So so far we haven't seen this thesis that it's digital gold yet. It's not performing the way gold does.
I think that the argument about, like, I think the argument that that it could become a currency, which I guess the way they look at it is because it's immutable, or like there's only 20, the supply doesn't expand. I guess it'd be a store of value compared to the dollar, because the dollar in theory should be over time going down. I don't know. It's like I said, I think it's a replacement for gold. I don't know. To me, I liked the more like it could become a currency argument. Like the one like Fabio laid out well last night. Versus that, I think it's I think, a more fundamental argument, because I think like gold's the big thing that gold's just had is that it's been around forever. And this has been around for 14 years, or 15 years. But the thing is, and this is why I say the time to like buy Bitcoin is when it's going to be at like 90% dominance of the crypto market, because you can make this argument for Bitcoin. Every other coin, it's like, yeah, you can't say that for all these other things that people change the rules all the time. Like Ethereum is just basically a company at this point, right? And I think like once you wash out all those other cryptos, then you can actually see like, is there something to Bitcoin? But I think when you have like Stellar Lumens and you have Cosmos and Uniswap and Ethereum Classic and Dogecoin and Polkadot like all still alive, I don't know. To me, that's just like froth. But and when I say alive, I mean like worth billions of dollars.
I view crypto as a collectible. That's all I'll ever. For now, I don't see what other use you would. Okay. So this is what I view it at. Like here's a bottle of whiskey I have. So this is what the price is. Like I've seen this price for it now, $2,000. I paid $200 for it in 2000, I think 8 or 9. So it's 10x, right? It's and there's no cash flows, intrinsic value. It's just it was something. There was only 15,000 bottles made, so finite supply, and there you go. That's what I think of crypto.
Do you have?
It's a collectible.
Do you have to store that in a certain temperature and stuff, or like how do you?
It's in the basement.
I don't know enough about like.
I should, because it is pretty valuable now, but so it's a numbered bottle, which is pretty cool. But that's I don't know, like if it's or a classic car. Like my uncle has a Corvette, like a 69 or 70 Corvette. I think he bought it for 20. Now it's worth like 80 or 90. Again, crypto, same idea. There's a finite supply, and someone will pay you more later. You hope. There you go.
Right. But the thing is, like, that argument to me, this is the problem. It only works for Bitcoin.
No, yeah, because of the finite supply. The other that argument doesn't make sense for any of the other ones.
The other thing is, like, I think with just about every other one, there's almost always like a centralized person that runs it, or there's inflation in it. One or the other. It doesn't either centralization or inflation usually. So
I'll believe it when I see it, because if it becomes a current, okay, why can't the government make their own if it's going to be a currency? Why can't we have a treasury coin? Why can't JP Morgan have a coin?
Isn't that what they're talking about doing, the central bank digital currency?
Yeah. So if it's going to be a currency, then why can't the government just do it then? And they'll do it better than everyone. You might think, oh, they'll screw it up. I'm like, no, they'll do it right. It just might take some time. Time is the issue. So the government is slow moving, but
the biggest thing with that is like, I'm pretty sure that government trust is an all-time low. So like getting people to actually use that, good luck. But
so besides crypto, just as a whole, this is why I wanted to short Coinbase, and I missed my shot at it. I still might, but I think we talked about this because I said I'm not so sure Coinbase will benefit from these ETFs creation at all, because everyone was assuming they would because they have a crypto market. But you can look at this one. So this is Invesco's Bitcoin ETF. You see the Galaxy, this part?
Sure. So what does that mean?
We go to Galaxy. Guess what this is? It's a mining company. I don't know if I was talking about with you or someone else. So they partnered with a mining company.
Interesting.
To provide their Bitcoin. So yeah. So this is part of what I was thinking about Coinbase. I'm like, everyone was just thinking because anybody in crypto will benefit from these ETFs. I'm like, maybe. Like, who are they partnering with to get and store and hold their? Because lots of companies can do this, not just Coinbase. But they could go directly to the miner. Because why do they need Coinbase? They can just go to the miners that are mining the Bitcoin, and they could probably store it because they already are storing it because they're creating it or mining it.
The other thing is like the kind of fees that Coinbase charges for you and me to buy crypto. At least last I checked, which was a while ago, it was a fairly high I'm sure they brought down a bit, but it was a fairly high like fee. There's no way they're going to get that fee with these institutions. So,
No.
and last I checked, wasn't the expense ratio on these very low? Like the
I
expense
looked at
rate.
3 and they were like 0.3, 0.4, which I thought they'd be like 1%. I was
The thing
kind
about
of surprised.
it's 0.3, but that's spread across. It's gonna be then spread across Coinbase and the um whatever, like the BlackRock or iShares or whoever's issuing um the ETF. So then
Mhm.
what's Coinbase getting, like 0.1 maybe on that?
Yeah. So here, like Galaxy, they offer institutional access to crypto. So
So like
yeah.
I'm just trying to see actually, because if let's say Coinbase gets 0.1% on the funds that institutions are holding with them through these ETFs. So like what there need to be there would need to be like 100 billion for them to produce. I don't know what I have no idea. I haven't looked at their cash or their financials. But there need to be a lot of money for that to be even. So they're doing like 3.5 billion
Mhm.
in revenue. So they would
That's what I
need
thought too, because I'm like, they're collecting, I think, 2-3% on transactions.
right.
So now they're gonna replace that with point 0.3 or whatever they get.
No,
They're gonna probably get less than that.
no, they're going to way less because point 0.3 goes like how much of that's going to the marketing and the
Yeah.
stuff at that's what I'm saying. Maybe point 0.1.
Yeah, yeah, because they gotta split it out.
So let me just
So honestly, Coinbase at even 130. I mean, there could be some downs. I'm sure I could see it going back in under 100. I think it ran up way too much.
yeah. Well, Coinbase is still, I mean, it should still kind of trade in line with crypto, I would think, because, you know, if I go and I trade on Coinbase, like the higher, even though you might say it doesn't directly impact the price of like what I'm paying in fees, more money flows in when Bitcoin or crypto goes up to Coinbase. So
Mhm.
I don't know, but
But I'm with you though. Like if I was to do this, I would just buy the crypto on, I don't know, PayPal or I don't know, somebody,
Coinbase
Coinbase.
even.
I don't even know if I have that many options. I had an account with the Winklevoss twins.
Gemini?
Yeah, that's gone. So
What's
actually, I don't
Gemini?
know if it's gone. I think it is gone. I'm pretty sure.
No, I
I
think that
had
one's still
Gemini.
around.
That was what I was using.
I
So
think they did fine. I think they're still around, right?
are they? They got in a little trouble after I took all my money out. I was getting emails about. Let me see if they're still. Maybe they are still running. Okay. I don't know if my count still works. There's nothing in it, but yeah, I went through a phase. So I put like 150 bucks in like 20 different coins, and it was like, but mostly it was Ethereum, Bitcoin. So
There was what was the one where they were paying you a bunch of money? Was it Celsius? Was that the one where you got paid a ton of money to like uh loan your money through them? Uh,
Gemini would let you do that. So you could hold it, or you could move your crypto over to the loaning side. So
but
there were two sides of the operation,
I think
basically.
like Celsius. So I think though, like Gemini was doing like, let's say you gave them your Bitcoin, they give you like 4% or 5%
Yeah.
maybe.
It would
Celsius,
fluctuate, like, almost weekly, it would fluctuate what they would give you. Yeah.
but I think Celsius was insane. I want to say it was like 10 to 20% somewhere in there. And this is when rates were at like zero.
Yeah. I mean, that was
And
appeal. Honestly, Algorand gave me, like, 8%
mhm.
staking. That's kinda why I did it because my bank account's paying, like, point 0.4.
Yeah. So you're just like, hey, it's like
Yeah, and every day you watch the little thing flying over the numbers as you get more. I was like, it's kinda because it's constantly ticking, so you can look and,
it's
the
true.
the decimal goes out, like, 12 points, so you can see it constantly churning.
Yeah.
It's
No,
kinda
and
cool.
I bought Ethereum in Bitcoin, and I was actually like in the last bull run. I think I said this that I was like when I originally started to get into this, I was like, oh, this is cool, and I was bullish on it. And then for me personally, the more I studied it, especially stuff outside of Bitcoin, I became more like bearish kind of, or like this is I don't know if bearish is the right word, but bearish the current market cap they're at. But like this is overdone.
I would never put anything serious in these things. It's kind of just fun stuff.
Well, I mean, isn't like Solana, wasn't that one that was the one that started the crash last time, right? That wasn't like got like hacked
I think
or
so.
something?
There was one that was tied to was it Tether that went off the dollar at one point and people were freaking out.
Yeah, so Tether's
It
always
was
had
pegged,
this
and then
like
all of a sudden it deviated immediately, and people were like, "What the hell?" Because it was always supposed to be $1. If that was the one I was thinking.
yeah, so Tether I haven't been following this closely, but like from when I was following a little closer, everyone that was in crypto is like I just wish people would stop using Tether. Oh, Jake's right. It was Luna. Okay. But like I know people from everything I like hear is like people are always worried about Tether because there's like a lot of shady stuff with Tether. Like they have, but the USDC actually is one I thought was because Dex is saying USDC depegged, but I thought
Is that
USDC
the
was like,
one? Okay, I just remember one of them depegged, and it freaked everyone out because it was never supposed to.
but
So that
I could be wrong. I was under the impression that USDC is more like they get audited and they prove their holdings and everything. And if I remember right, like Tether won't do that. Like Tether like gets like these weird, like there's a whole thing around Tether that it's always like kind of weird and cryptic and shady. Like they have like supposedly like 10 employees that's running something that's got, volume in the last 24 hours of $73 billion. I think that was like, I'm pretty sure, I think even like crypto bulls say like Tether is a little shady. I could be wrong on that though, but that's what, when I was like 2020, 2021, 2022, I know people were not super happy with, or like we're kind of, I'd say like wary on Tether. Just for like you use USDC instead. Could have changed after a depeg though.
So you're out on the ETFs, but you would
Mhm.
hold Bitcoin potentially. Would you trade anything? Or are you always
Dude,
open for trading stuff?
I'll trade like with small dollars, but and for me personally, I I wouldn't put any serious money in any of it. But if I were to actually put like serious money, it would be in Bitcoin.
Mhm.
Um, Trading, if I had the way that I look at trading sometimes is it's like people like to gamble on sports games. Sometimes I like to buy a call option. It's like that's
Yeah.
how I kind of look at this if I put money into it.
Hey, I
The,
bought
the
Walgreens just for shits and giggles, honestly.
right. It's like what Fabio does with like PayPal sometimes. It's like, oh, I bought PayPal just for fun. So
Although I think half my upside of Walgreens is gone now, but it's all
oh,
right. It was not much, but
why, what happened?
all right.
Did it go down?
I think it went down. I think maybe I'm up like 2 or 3% now.
Oh, it went down 3% today.
Yeah. I might hold it for like a year. It's like 100 shares. I don't care.
I will say this. I would rather put my money in Bitcoin than give it to Jeremy or Paul. Which is not saying much for Bitcoin, but like,
Oh my god. Okay. I want to play you a part of okay, hold on. Let me get this out. So I'm going to play a part of this. This is from a Boeing special from Frontline talking about the last time a Boeing when the Boeing planes went crashed. So I will play this part. It's just like a minute. Right? I should be able to hear it.
can hear it, yeah.
Designed for these extreme
Can you hear it? Okay.
Yeah.
maneuvers, situations that hopefully the plane would never get in. And to prevent the nose from getting too high, the system would move the stabilizer on the back of the plane to push the nose back down.
But inside Boeing, there were early signs of trouble.
One of the first documents we found was from November of 2012. A Boeing test pilot was flying the MAX in a flight simulator and trying to respond to an activation of MCAS. And that resulted in what he described as a catastrophic event. It showed that if that had been in real life, he could have lost the airplane. They realized from that moment on, even a Boeing test pilot may have trouble responding to MCAS.
The company kept quiet about the simulator experience and appeared to have discounted the test results. Still, in the following months, some Boeing employees suggested simply removing all references to MCAS from training manuals.
Boeing, from almost the very beginning, realized the significance of MCAS and the significance MCAS would have on pilot simulator training. If we emphasize MCAS as a new function, there may be a greater certification and training impact. Recommended action: investigate deletion of MCAS nomenclature. What that meant was that if they said MCAS was a new function, the FAA was going to scrutinize it a lot more.
So
Wow.
that's everything. That's 1 minute describing to you exactly what happened with the Boeing right there last time. They hid the fact they put a new software system in 737 MAX because the bigger engines caused the plane to be more unstable while being more fuel efficient. So they brought this military system into these planes, and then they hid the fact that they did it so that the FAA wouldn't scrutinize them. They also hid it from their pilots. So the pilots didn't know how to react when this thing went off. Part of the reason why they crashed. And also they put a sensor in the front that didn't have a redundancy. They only put one sensor in. When that sensor detected a error with the plane when the sensor thought that plane was like tilting, the MCAS would activate and it would go down to try and flatten it. So just catastrophic failures on every part of Boeing on this for why those planes crashed.
You're a
And it's the
plane
same
company,
company.
like
It's the same company.
Well-
this door stuff is not surprising.
well, the thing about Boeing is, like, you're a plane company, you test something, it's like, oh, this might cause a problem. Even if you're like, well, let's not tell the FAA about it, at some point that problem's going to rear its head. And I mean, you're going to have what happened, right? So it's like, what was the thinking here? Like,
they had to get the plane out for as cheap as they could. There was a lot of pressure to get that plane out because huge amount of orders. You know, everything was on the line with Boeing to get that plane out because Airbus had new planes out so there was a lot of pressure for Boeing to perform. And you know, they hid like every category. Like everyone here should go watch that Frontline special. It's on Frontline's Facebook or YouTube page. But so people, if you're wondering why I have disgust for this company, I guess there you go.
well, the thing that I think is like a problem is, I think personally that if you're a manufacturing company, you should have a company culture. And I know like work from home and all this stuff is like the hip thing. But you should have a company culture of actually being like, if I understand, their C-suite all work remote. Like if you're a manufacturing company, you need to be on site, man.
Yeah.
Like you're like,
there's
okay, yeah.
There's no reason that the headquarters had to move out of Seattle. They state it was because they wanted to be near the financial centers of Chicago. The truth of it is they wanted to get away from the engineers that were complaining to management about these planes. And they wanted to get management away from them so they couldn't influence the decision making. So,
well,
my opinion, people. But
I don't know if that's the case, but my point is like, regardless of what the reasoning is, okay, you can have maybe finance work remote because that shouldn't be a massive, but like if you're a manufacturing company, you should be on site. Like, like you're making this, especially something like a plane or a car or something, you're making something that people are like basically trusting with their lives every time they get in it.
And there's thousands of internal emails and documents from when this disaster from the investigation. That's where some pilot commented that the 737 was designed by monkeys who were supervised by clowns. That's a pilot from Boeing or that test flew these things wrote that.
Wow.
You can probably get all this from the government if you wanted to. They probably have it for public record, I bet, at this point. but they had to pay a $2.5 billion fine if people didn't know. And they're doing the same thing over and over again because we'll find out they're going to lie about this. They're going to pretend this wasn't an accident when they probably did specific things that were irresponsible. They'll pay a fine and they'll keep making planes. And hopefully no one dies. Thank God no one died. So,
Well, it's funny because I actually saw two really funny posts or like comments on this. One was a Wall Street Bets. It was like, is it insider trading if I was on the plane and I started buying puts when the
I
window
saw
went out? I was like, he was like, that cracked me up.
Wait, was it during the day? Because I tried to figure out when this happened. I'm like, could you literally have done that? Because I thought it happened at night, but
I have no idea when it happened. Obviously, the guy's just like messing around, but that was
bro.
Also, well, actually,
would you have? I would have done
Robinhood
it.
has 24/7. Robinhood has 24/7 trading, don't they?
On certain stocks, I think. I don't think all stocks, but
Boeing might be big enough that they do it.
dude,
But
if I was on that plane, I would have so freaking bought puts. Oh my god, as it's landing.
You're like, all right.
You called SoFi for personal loans on the phone before we land. More leverage.
I need a personal loan. Why? I need to short the shit out of this company.
Now.
And then the other thing, and this was like kind of true for me at least, like someone's like, well, a bunch of window, because I've always been a window seat person. It's like,
me too.
Maybe I'm going to become an aisle seat person. I don't know.
Brand new plane. Unbelievable.
It was brand new?
It was like 2 weeks old. Yeah. So, I don't know. I mean, someone go have fun buying this company, I guess, if you want. But I'm sure there's more to it than oopsie. So they found out on multiple other planes they already found bolts. So
really?
Yeah. But this just sucks. Beyond investing, it just sucks that the biggest airplane manufacturer in America is such a piece of shit company. This just sucks. Like, how did we get here?
Scary.
Yeah. And you know where they're moving their headquarters now? Washington, D.C. Why do you think that? It's like pretty obvious. They're going to influence. They don't want to make better planes. They just want to make the laws suit their needs better. So,
what's I going to say about them? I was reading they merged with some other company at some point. Like, I don't know how long ago it was. Someone was claiming this on, I don't know if it was Reddit or something else, where they were kind of asking us, like, how did we get to this point with Boeing? And someone was saying they merged with another company, and basically because Boeing, they're saying, and I believe this because this is how they became like the biggest airplane company in the U.S. was like they used to have this culture that was very engineering driven, very like high quality stuff, which makes sense. I mean, you have to be to become like this big of an airplane company. And then they merged with someone, and that company had a less, kind of a more, I can't remember how they put it, but like not as I don't want to say perfectionist, but like perfectionist, high quality culture. And they actually kind of assumed the culture of the other company they merged with. That's what I was reading. And maybe it was McDonnell Douglas, was they were saying, the company they merged with. And that's like when they kind of assumed that other company's culture, and it kind of declined from there. But
just sucks. And like all these emails, like they're all in on the joke. It's just like, how do cultures fail at companies? Like, honestly, it's like stuff like this. You start sending crude emails, and then nobody says, hey, don't do that. And then they just keep ramping up. And then all of a sudden, everyone thinks it's funny that these things fail the simulators and planes are breaking down. And haha, it's so funny. It's like, this is how corporate cultures fail. You know, on top of the friggin' CEOs probably trying to cut costs and all. But
like it's crazy because it's one thing if this is like let's say this is a semiconductor company that makes things exclusively for computers, like that are used for personal use. Like I could see that being like this internally, because it's like, yeah, if your computer blows up, who really cares? Like, oh shoot, I lost a $2,000 computer and I have to buy a new one, and the company just sucks. Okay, whatever. This is like people's lives. That's the like,
yeah,
literally. I want to say, I don't know what the percentage is, but most of the flights in the U.S. are on Boeing airplanes, I think. Because like whenever I fly now, I hear it's like, this is a Boeing airplane. I'm like, ah, shit. And like literally the American population is putting their their trust in your hands, and you're like talking about how it's like a piece of shit and it's okay, and like that's the crazy thing.
And there's no great answer. I mean, the government can't take over companies, but you can pass stricter regulations. I don't know. You can have government inspectors on site because they don't have. That's not how planes are inspected. Like it's not like the FAA or like the air, like your food you eat. There's inspectors on site. Planes are not like that.
Other than Airbus, who makes planes that even compete with Boeing? Like, I will say, if you want a definition of a moat, this might be it. Like, this company's doing everything to like kill themselves.
I know.
That's probably a bad word, but like destroy the company, and it literally can't.
Well, RTX just makes engines and small jets. Lockheed. What's this? I don't know what that one is. Saffron. I don't know.
Who makes like the transport planes for like the military?
Oh, the C-31 is it C-51 Galaxy?
I don't know.
I think it's Lockheed. Yeah, Lockheed Martin makes this one.
I wonder if Lockheed could start to like, if like, I actually think it's like in the best interest of the American people. Like the government says, "Hey, Lockheed, why don't you start?" I don't know, find it like I don't know if they'd subsidize it or like find a way to basically say, start making this like public, like a version of this, adjusted for public use, basically.
I mean, I flew to Afghanistan on one of these because you fly commercial jets to Qatar or Kuwait, and then from there you take C-5 Galaxies into country. So they're very smooth ride, actually. So.
Oh, I mean, I Lockheed makes good stuff. So
yeah, I mean, that would be so great if Lockheed started. I know they don't want to. That's the thing. They don't want to get in this business.
Right. Yeah.
No. Oh well. Our mission. Yeah, I don't think. What are these? Saffron. I've never heard of this company. You know what they make?
I don't know if we want a company that we don't know, if we've never heard of. That's the problem. It's like
there's lots of companies that make parts for airplanes. Tons of those. Like this is one I was looking at when I was looking at military companies. So they make avionics for planes, and they also make avionics for supersonic or hypersonic missiles, which is kind of interesting. But look at it's very expensive. So
yeah,
there's lots of these companies though where it's like 50% military, 50% like commercial air. But a lot of them have run up already, and some of them you wouldn't really. They look like shit, honestly. Some of them.
I'm seeing Bacon's commenting now. I was like, Bacon be like the perfect person because to comment on this part of on the different planes.
C5s are massive. Sadly, a reputation for breaking often. No, that doesn't make me feel good. I'd say the coolest thing I've ever ridden in was a Chinook. Those are fun as hell. Because in Afghanistan they stay low. So he's hugging like 200, it felt like 200 feet over the ground. And when you're in a Chinook, if you're in the back, he tilts it when they're going. So you're like looking down, you're strapped in and you're like looking down, like, that pirate ship ride at the Carney Fests?
Yeah.
Yeah. It's like that. You're at the top of it. And like, so he's hauling ass and I'm like, holy fuck. I didn't even know what I was getting into, but it's the smoothest ride because it's two propellers going in the opposite directions. So it's not shuddering like a normal helicopter. Like if you've been in a normal helicopter, it's like a shaking mess. But
I've never been.
No
helicopters. No, dude. Helicopters. We're talking about planes like breaking down stuff. Helicopters scare me. I've heard too many horror stories of like for public use. I don't know about like military wise, but public use helicopters just.
I've been on Black Hawk. That thing shakes you to death. Like I thought I was gonna like just you're shaking so violently the whole time. I thought I was gonna like die in that thing. The whole time it's just like what the you're just constantly just shaking.
Yeah.
But anyway.
And it's sad because it's like what's the alternative? Because like you at least hope that because like sadly part of the thing is like the executives at Boeing are kind of sitting there and going like, well, I mean, we have another thing. We pay a little fine. We move on. first of all, they're flying private, so it's not like they
Yeah.
have to ride in their 737s.
No.
But it's just kind of, I don't know, doesn't make you feel very, very good.
No.
But Airbus, how's their stock been doing?
Let me see. Got pull it up. That I think Presley asked me about. I'm like, I mean, this Airbus is backed up on order flow, so I don't know how much more production they can do.
That's the
If
problem.
they're
is,
already
like,
built, if
there's-
they're already manufacturing at 100%, then
Well, and that's the problem. It's like it can't. The government can't just be like, okay, Boeing, you've had your chance. Now we're going to have someone else do it. And it's like, well, who? Because
it's
who
ADR.
can? It's putting a plane together takes a lot. I mean, those, you can't just ramp production on that easily.
Yeah, I mean, if they already have a huge backflow and they're churning full tilt,
I'm sure
like they could have more orders backlogged. I don't know if that really matters to stock price, but
yeah. But
so this is I guess I was going to cover one stock very briefly.
let's see it.
We're at an hour, so I'm just going to be quick. So I was looking at this company. I think I told you about it, Cabinetry. So
Yeah, you
it was
mentioned
my
it.
first company that did specialized hurricane windows got bought. So freaking about that. It was going to be a beautiful. Again, if I was a month earlier, I would have had like a 20% upside. So I'm like,
That
damn it.
sucks.
So this company's kind of interesting. They got spun off. They do cabinetry. What kind of caught my eye, they do different, basic commercial, designer, more high-end cabinetry. I liked how they have different channels. They're not just relying on one type of cabinetry.
Mhm.
They do new homes, they do remodeling, they have wholesale business through dealers. So I was like, oh, this is interesting. They have diversified asset streams of revenue.
Can you do me a favor? Can you enlarge this just a little bit?
Like that?
Yeah, that's better.
And then I saw so I hadn't looked at the financials yet. I'm just looking through the presentation. They've streamlined their production. So I see this and I'm like, all right, I bet you they close their US plants and they're in Mexico, I'm assuming at this point. When I look at this,
Yeah.
they moved. I'm like, okay.
Oh, because they rationalized.
Because when you see this with like home stuff, I'm pretty sure it's Mexico because they wouldn't do it overseas with shipping. So I'm like, okay, they streamlined their production. So I'm thinking in my head, they should be seeing margin improvement if they did all this. So this is where I started. So lean, they started to, instead of producing on order, they were now producing stock inventory was their idea. Because before they were just producing when they got orders. So I was like, this is kind of interesting because then like if home buildings start coming back next year, if interest rates go down, people are dying for housing, they could get a lot of remodeling plus new house construction. They could see all of it. So, but then we go to the financials. So that was, I think that's the picture and the management wanted me to see. So first thing I saw when I went to their financials, I'm like, oh, first thing I want to look at is cash and cash equivalents and total debt. So I'm like, all right, $122 million long-term debt. It's like, holy shit, $1 billion,
Oh, no.
1 billion down to 747. I'm like, wow, that's a lot of debt.
Oh, this is reading right to left. I was reading left to right.
Yeah,
Okay.
right to left. So
Okay.
they took $1 billion of debt on when they split. So you can see they just created the stock. So I'm like, all right, I'm feeling like they split it from another company based on so short of a time frame. It's a 100-year-old brand. So now I go here. So now we go to the financials. This is for people. I'm not totally uninterested, but let me find it.
If you want to enlarge this as well, if you don't mind. Sorry. Yeah, that's good.
So this is where people like the research comes in. I found the company. It's in a lot of the spaces I want to be. I found it through like a search tool on Seeking Alpha. I looked at the presentation. Now I go to the financials because I've seen what management wants me to believe. So where that debt came from, they took out a loan, a credit facility. So they had a long-term loan and a credit facility. They paid $750 million to the company they split from when they split. Crazy is that? this Fortune, I think it's Fortune, Fortune Brands, when they split this company off, they gave a share. So all the shares of this new Mastercraft or Masterbrands went to the Fortune shareholders, and they borrowed 750 million on the new company and gave it to Fortune. So it's freaking wild.
When did this company go public?
Like last year, basically, or 2022.
Okay, because it looks like I'm just pulling up Fortune Brands now. They went public at the end of 22, so I guess they like split off to get. They like went public at the same time.
Oh, I didn't look at that side of it. Interesting.
I was more like, man, damn, management must be feeling good over there. It's like, oh, we just get a nice little $750 or $1 million in our pocket.
So we've seen this before, though, for people watching, like I have, where these new companies will get created through a lot of times it's through SPACs, but also it's through stuff like this. They will saddle the new company with debt right up front. So either they're paying off they're paying off the previous owners or the previous debt, or they're funding the transaction, whatever. So they put debt on the company as they create it. So now I understand it. So I look, but the interesting thing is they are paying it off like crazy.
Mhm.
So you could see in the filing, they already paid off the revolving credit facility that was due in 2017, $235 million. It's already gone. So they've paid that. So they've got the $1 billion down to 750 million-ish within a very short time. So
Because this is a quarterly statement. It's like within a year?
yeah, within about a year, they've paid almost 25% of this debt off. I'm like, holy shit. They have the cash flow right now. All their cash flow is basically going to pay this debt off. You can look like right now, they had 140 million-ish operating cash flow, and they were paying almost 110 million to the debt. So I'm like, they're cranking to get this debt taken care of.
So one of the things that makes me feel really good about this too. So when you do these spin-offs, right? Usually this was under the same company. You spin it off. They have a new management team that now cares about this, and the old company retains their management team, right? So one of the things I like to do too when you do this is check how the old management team is doing, because it's like, well, maybe the management of this was like pretty bad. Because also, this is actually interesting because now you're talking about they're talking about doing all these kind of improvements and changing their manufacturing and everything. So it could have been the old company that owned them. These guys didn't even like how they were doing this, like how they were managing the company, and now they want to. I'm not trying to jump in on your pitch too much. I'll let you.
No, it's not really a pitch, but the only other part I had was, so I saw the manufacturing piece. So I'm like, all right, did they improve the margins because they streamlined their production? Is what they're selling us on the investor presentation. They're telling us that. So I look, they are actually. Everything's trending upwards. I don't want to be like it's like blowing us away, but margins are trending upwards on them. So even though they had a huge downturn in revenue because last year housing sucked for everyone, but they managed to maintain their net income, and their margins were improving. So I'm like, what this changing of their manufacturing process seems to have positive returns. So it's kind of an interesting company, actually. Like you can see the story of it. It's almost like if they can race to get this debt paid off, this is a very profitable, high cash flow business that they're in right now. If they can get this debt resolved, and it looks like, man, within a year, it's like unless something. So like what could happen is like housing could stay down this year when it should be trending upwards. And the other part is they have a lawsuit from the Mexican government over back taxes or taxes they never paid that they were supposed to. I think it's in their filing. So that's what people, if you know they're dealing in Mexico, which is what I suspected, you should see if you should look for that in the filing.
Litigation.
Yeah. So litigation people, if you know they're manufacturing in Mexico or Canada, especially, check litigation in the filings. So they have a lawsuit over $55 million of taxes, I guess, that they have an argument with, which it's not the end of the world. They could afford this if they had to.
Just trying to see. Litigation is always something too. I'm not a fan personally of how people do litigation on audits. I don't know if you know like the rules on how litigation works, but basically the auditors will ask management, and they usually ask the lawyers of management to make an assessment. And it's always hard on a lawsuit. Like this one might be a little more clear because it's like they're just saying Mexican government says we owe this much. But basically, they'll ask a lawyer to say what's the potential, like what's the range you think that they'll pay for this, and they only put this on the financials if it's more than likely that you're going to have a payout, and they'll give a range. And let's say they give a range from like 1 million to 2 million. The rule is, this is the gap rule, you take the lowest number possible and put that as like, so I always
Oh, okay. So interesting.
yeah, I've never liked that about audits, but
I feel like they should like median it almost.
I do
I
too.
almost always like median over average personally, but
well, they don't even average, they just go lowest possible. But the problem they have, this is why Gap does it, is Gap doesn't want, they want to, as much as they can, prevent like revenue coming in from a release of your liability for lawsuits. So like they don't want you to be like having these revenue numbers coming in because like you had over accrued for how much you're going to pay out in lawsuits, which I guess makes sense, but
I could do this in ICOM if you guys want, but it is interesting. Like they are pretty cheaply valued. They're expecting down this year because I don't think they could project up because we don't know if housing will rebound at all. It's been miserable. So housing has been so under the norm. It's like their projections, of course, have to be down,
right,
like they are. So if we get any return to the norm in housing, this could be interesting.
I also I like, it seems like management has a deviation between them and their parent company or their old parent company on debt, which I'm generally not a huge fan of levering yourself up. And I just pulled up the old company, Fortune Brands, FBIN, and you can see, because it looks like 2020. So yeah, if you go to their financials and you look at their debt load, and you can do the same thing if you do quarterly.
I hate it as always annual. I don't give a shit about
Yeah. So you can see, where's the debt?
Oh,
long-term
right
debt.
there.
So you can see they, like September 2022, they went up 2.78 billion, and then they rolled out that other company. They probably took that 750 million, paid down their current debts, and it just started going right back up.
Right here.
Yeah.
You can see it right there, 270 down to 2, or 2.7 down to 2.
Yeah, and then look at this now; it's back to 2.8.
Jesus Christ!
So
What scumbags! I hate this.
well,
so they were just they just took the cash payment and just moved on.
Yeah,
Damn.
but to me, that's because I mean, and I can't say that I'm judging this management team just off of that, but to me, that's a positive sign for the company you like, because what that's saying is maybe these guys weren't managing the company that well.
That's why that's where my thought process was. They wanted to change their manufacturing from being the way it was. Like it sounds like a new way to manufacture the cabinetry.
Right.
So interesting.
This
This is the old company. I've never heard of this company, honestly.
No, they're decent size, like 10 billion market cap.
Security, outdoors, water. Oh, here's their brands.
Oh, they're doing
so maybe someone came in and offered them to, make that more profitable for them as a separate entity, I guess.
Do they
I don't like
hold
these conglomerate product design companies for housing. I like the ones that are like, we do like one thing. That's why I like the window company. It was like they did windows and garage doors for hurricane ratings.
I like how they say water innovations when what they mean is sinks. Like, I'm pretty sure that's what it is, right?
Copyrighted. You can't say sink, I guess. I don't know.
Like, I guess they're saying there's like water management, but
I don't know. Well, I'm kind of intrigued more. I looked at it this week a bit, and I got bummed out when I saw that the debt, but then I kept thinking, I'm like, it's not the worst. They're really, they've done a great job. 25% of it's gone now. So I need to dig more into I haven't listened to any calls, so I'll listen to a call probably this weekend, but it's kind of intriguing. It's the best housing investment I've seen so far, honestly.
Well,
a lot of shit shows. So
I kind of like, so the cabinet one, they just make cabinets, right? Like they do it well. This one seems like they're more like, here, I'm just gonna, if you let me present for a second,
Yeah,
it
just
also
pop.
seems right here. Like when I look at a lot of their stuff, it seems like they're more focused. Like the other guys are just like, let's just make good cabinets. These guys seem more like modern, like material conversion, sustainability. If I go to the water innovations, it's like smart connected products for water, for sinks. Because even if you go down here, it's like digital water, which is, I don't know,
The hell is-
faucets. So I could be wrong on this, but I feel like there's some things you don't need to innovate. And one of it's like your sink. Like maybe
No.
I'm wrong, but like I turn it on and it works. That's all I need.
Well,
Security. So
touchless sink. Yeah, I've never needed an app for my sink. I don't think.
so
I'm
these
good.
guys almost feel like they're more smart home focused, like connected security, like smart sinks. So and those guys, so maybe there was also a bit of like, I don't know, like a deviation in thought where these guys are like, we just want to be really good manufacturers of cabinets, and these guys are like, which I guess like if you make high quality cabinets, they probably will go into smart homes because smart homes are probably more expensive.
Hmm.
But I can kind of see in my head at least where the deviation happened, or what's their history.
I mean, my parents just redid their kitchen. They're going to spend over I think $30,000 to do their kitchen. It's wild.
How much?
30 grand, I think it's going to be.
They separate our cabinets business, enabling us to pursue our unique and exciting path for accelerating growth and productivity. So why did they think this was good for them? Two world-class publicly traded companies. I'd actually be curious. I think like part, if you wanted to, or maybe we can do this together, but like do the DD is also look at these guys' earnings calls and see like what they're saying is why it's a good thing that they're spinning them off. Like
Yeah.
why do they think it's bullish for them?
Well, they got two. The Masterbrand never went public. Technically, they gave all the shares of Masterbrand to Fortune shareholders.
Mm,
I mean, it's public now in the secondhand market, but so in that way, they never really truly, because if you held those shares, it was never separated.
yeah, it's man. They have a lot of acquisitions, which I guess that's probably why their debt load's been going up. So
Mhm.
maybe their thought was, we spin off this company, we get money to go buy other. I don't know. This one, oh, they make master locks.
Oh, wow, really?
Well, I'm assuming if this is their history and they have master lock right there,
Maybe I don't. Yeah, I never thought of who made Master Locks.
and then it has master lock celebrates its 100-year anniversary. That's really weird though, because like they have security here. Oh, they do have master lock right there, but when I went down, like it looks like they're trying to show off like smart security. That is master lock, huh? Oh, huh.
Hmm.
And anyways, so just find this interesting.
Yeah. So I don't
But
know. I'm gonna think about it more. It's the best house investment I've seen so far. So
what's happened with the stock price in the last like year?
it's definitely run. I think it's up 80% in a year.
Okay.
So this is like every housing investment I look at, it's like, oh, it's up 40% since October. Great.
Yeah, that's the difficulty.
Yep. But it's
That
still at a fair enough. It's not terribly. I don't feel like it's overpriced. It just depends on how this year goes, I guess. Does housing come back? Are they in the position to benefit from
yeah.
it? But,
Huh.
but then like this in my state, like there's this huge push for housing. So this just came out this week at the budget address that they did. So there's a push by even in New York, they're trying to build, 15,000 new housing units in the state. They're going to use government or state land to build new buildings, I guess, and like make approvals quicker and stuff. So just speaking about New York itself, I can see the push for new housing in my state already. They note about like a deficit of housing.
How do you? So I'm not from New York. How is there even land to increase housing supply in New York City? Like, how would they even?
Like in the city, they can just, refurbish older buildings. I mean, if you actually go 1 hour north of New York City, you're in the woods actually.
No. Well,
There
I,
is,
don't- I was just reading the announcement that said they're focusing on increasing housing supply in New York City.
yeah. Well, I think the approval in New York City is going to be like streamlining approvals and zoning. They're going to try and streamline the approval process.
Oh, okay.
But like building, I'm not sure how they're going to do the building on state land. Like, are they going to sell the state land to people to build houses, or are you going to do like long-term leases, which we've done in the state, like commercial buildings on state land, like 100-year leases? They
Yeah.
did it near me at the state offices. They let them build a huge apartment building on state land, but they didn't sell the land to them. So freaking weird.
Well, I can see
Like
the
a
state.
European thing, isn't it?
Yeah, that's very. I was gonna say that's
Yeah.
how. That's there's that pitch for. I think I mentioned you Vistry Group. I think, and they were kind of going through that, and that's exactly how the UK works. Is the municipalities hold the land, and then basically they contract out with a builder to go and build on it, but they still own the land. So
Do you
then,
Yeah. Do you remember when I talked to you about this when you were in Sterling Infrastructure? I don't know. It was last year,
I
but
don't
yeah.
ACA.
Because I was talking about this, and then you told me about Sterling, and
Yeah.
they actually both have done really well. It's kind of funny. So I was looking at this, I think, last summer. So it's up like 30%,
They have done well.
but then the one you were doing was Sterling. That one did, I think, even better.
Yeah, Sterling just like rocketed. Like
No, that's
it's
not
one of
good.
those ones I got, I had like a 1% position in it and just rocketed on me, and I was like, and part of the problem I had was it had a massive multiple expansion for Sterling, and I was
It's
like,
still cheap actually. Well, not cheap. It's not overpriced though, I don't think, when I was looking at it.
when I was buying it, it was at like, I can't remember the PE ratio. I just remember saying buying this company at 4 times EV to EBITDA is too cheap.
Mhm.
Like, and because one of the things I was saying is like I could see these guys getting taken private. So like I was looking at it on an EBITDA basis. Maybe it was like 5. It was 5-ish when I was buying it. And now it's at like 8 or 9, which is like, so it had the benefit of almost doubling its multiple.
Jesus.
So I was like, well,
That's the other part. I want to look for construction. So like housing, like, so that cabinet maker, and then I want to look for like a infrastructure play. I think that's probably, if I can get one of each, I think I'll be happy. So
one of the ones I was kind of looking at that I thought might be interesting, maybe like the theme. I don't know if you heard of Primoris. It's PRIM. And the only reason I find them maybe interesting is if we believe that like governments are still going to invest in like commercial, if we think the move to commercial solar is still happening, like you don't have to believe that commercial solar will make sense, but that, oh yeah, and Road too. Road was another one I was looking at. That one I actually like a lot too. But because Bacon mentioned that one, they just built. These guys are fully. Well, I'll talk about them real quick. They are basically highway like repairs in primarily the southeast. So think North Carolina, Georgia, like Florida. Like I think mostly northern Florida though, where there's a lot of repairs that need to be done. And what I did was I went and I looked, and the governments in these regions, all the states that they're in, the governments were in the top 10, like for the state of increasing their infrastructure spend. So, but I just the only problem I had with that one was I didn't think management was great. Like that was my biggest Like it seemed like Sterling management I just thought was better. But I mean they've done great too in the past year, so I don't know. When we were looking at them, I think Fabio even bought them for a little bit. They're at like 25. I think we sold them in the early 30s though. But I still think like you want an infrastructure play. That's what these guys.
What is
are.
it? P what?
Oh, the other one is PRAM, and those ones I'm sorry, IM, and they're another like kind of construction company, but a large part of what they do is they do commercial solar, and I'm like, and they just do the building, right? And it's like, do we think that people are going to build more solar? Like, you don't have to be bullish on like if you think solar works for everyone, but if you think people are going to build it, and like get those solar credits.
I like how they're all just looking off into the yonder. Guys, just look at something. Fucking look up. Get off your phone.
Do you want to see one of my favorite? Let me see if Rhodes still has it. One of my favorite slides from their investor presentation. Hold on, let me see if I can find it. This is a newer presentation, so I don't know if they'll have it still. Let's see.
Guidance. It's funny though, because a lot of these commercial solar projects in New York have not done well, but you shouldn't probably be building massive solar farms in New York. I mean,
but and that's the thing is, it's like these guys don't have to care if it goes well. They just have to say, okay, you're going to build it, you're going to pay us for it.
Right.
Like
everyone's got the cash up front. It's like until they start operating.
Right. I can't. It was an older presentation, but it was funny because they like talk about it had like a diversity, equity, and inclusion slide, and then like 2 slides after it, it had the management slide. And I mean, I can show you the management now. I think it's actually become slightly more diverse, but it was all those white, like old white guys, and we're like, wait a minute.
This is it. This is it. I like how they got the flowers. They had to make sure they got the maximum flowers under these things.
Oh yeah. Oh yeah.
Make sure
like,
they're green, just so you know. But interesting. Yeah, I'm gonna find an infrastructure play of some kind.
What is our What's our Arcosa focus on?
Like just construction, like Texas, down in the south.
Okay.
So they were spun off from Trinity Industrial, which is a train car leasing company. That's how I kind of caught on to them. I was like, oh, interesting. Their margins aren't as good as Sterling, though. Not even close. But I'm going to revisit them. I haven't looked since the last. When I looked at them, they were like $50. Now it's almost $80 a share. So I don't know. The only last thing I had, I was going to talk about this, but I found this is an interest for if people out there if you have a personal brokerage outside of your retirement, so it's a taxable account, and you wanted like a set and forget investment, this could be something to look at for anyone. So it's a MSCI Global Stock Market portfolio from State Street. So it's portfolio, so it's going to keep the share price down. They'll just split it when it gets higher. So you get world exposure for only 0.09. And it only pays a dividend twice a year. So it's like the least taxes you'd pay to just hold this thing in a personal brokerage outside of a retirement account. So anybody interested in that, you can go look. Yeah, like because I was trying to look for someone I know. I'm like, because outside of a 401k or a Roth, he wanted something that was easy to buy, like one fund. So this was the best option I could find, where you get world exposure with a lot of these global ones are like 0.3, 0.4 ratio. Jesus. So this one was like, holy crap. You get worldwide exposure for really good ratio. So, and then the fact that it's a portfolio model, they'll keep the share price down if you can't do fractionals, which I can't in Schwab. But
what's the So this is a global one. So sorry if I misunderstood. So what's
Yeah, it's
like
global. So it's one. It's set and forget. They have the whole
what
world. They do.
what's why not VT instead of this one?
You could actually. That's
Oh,
the other option I'll give you.
let me ask this then, because I'm just trying to understand. What's the difference between the two?
So this, you're not getting every stock in the world, which I talk. There is no other VT. That's the only one. This one represents the world, though.
Okay.
So you have large, mid, small caps from 23 developed markets and 24 emerging markets. So it has the exposure of 99% of the world, but they don't invest in all of it. I think they only have like 2,500 companies in this,
Only.
but you're getting the same weightings as VT. So yeah, I'm going to give them probably either or. I like to give people options. So what's nice about this one though is it'll keep the share price down, whereas VT's share price will eventually keep going up and up. Or this one will stay under 100 probably forever, since it's portfolio one.
What does that mean? So do they just give you distributions out, or what do you mean?
They'll just do reverse stock splits every once in a while.
Okay,
Like Schwab's like if like was it like their large cap split like 2 years ago, so they keep the share price lower, which is good because if you don't do fractionals, people, it's better to have it be like $70-$80.
Oh, for sure. Yeah. Versus $1,000.
Yeah. So for anyone, and plus this does only 2 dividends a year. So if you hate dividends, it's got less dividends than VT. Maybe the yield's the same, but
I mean, I think for the vast majority of people, dividends don't matter unless you're like doing the crazy like Yieldmax ones. You're not going to get much of a dividend where it's going to matter significantly to your taxes.
no.
I mean, unless you're doing Yieldmax.
Rogel.
Oh,
Way to end it. Rogel. You
awesome.
said why not VT, and I was like, oh yeah. I mean, I have something. I don't like Vanguard. I don't know. It's just the first time I ever tried to buy a Vanguard fund, they said I had to have a $5,000 investment to start it, and I've been pissed at them ever since. And I don't know. So I'm just not a Vanguard person.
Well, if it makes you feel better, I like SPY instead of Vanguard because the price mirrors it's like the S&P 500 minus like without a zero on it, even though it's like a slightly higher expense ratio. And I know it's stupid.
Hey, I mean, sounds good. Say you own SPY. That sounds cool.
Yeah.
But I don't know. I think that's it. Damn.
Yeah.
You're probably ready to go sleep. So.
Me? I actually just
right into this.
Well, yeah, no, I mean, I'll probably be up for a little bit. I remember it's 2 hours behind.
Oh yeah.
Yeah. Yeah. Well, thanks for having me on though.
Yeah, it was fun. So find some other stuff and try and keep people interested. It's hard to find shit right now. Like, I don't know.
It's hard because it feels like 2020, and I'll say this in obvious, 2023, it was like there's uncertainty, but it felt like the uncertainty people were, how do I say it, were more bearish. So you could find deals kind of easily. It feels like there's uncertainty now. People are more bullish. So you're having to be like more cautious with what you look for.
Yeah. Yep.
So,
well, thanks for joining, and
of course,
hopefully people watch the whole time. I don't know. All right. Well, we will see you later. All right. Have a good night.
Peace.